Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is Rayhaneh Sharif-Askary, Managing Director and Head of Product and Research at Grayscale, Chris Brodersen, Managing Director, EisnerAmper, Jason Allegrante, Chief Legal and Compliance Officer of Fireblocks, and Dave Navetta, partner at Troutman Pepper Locke. We're here to discuss why the digital asset and crypto industry will need both regulatory clarity and a legislative framework from which they are able to rely on. It is great to have all of you with us. Welcome to Trade Talks. Before we get into the policy conversation here, Ray, the digital asset space, it's different this time around, and I know that phrase is thrown around quite a lot, but how do you see investors approaching it this time?
Yeah, so I've been in this space since 2018, which is so interesting because back then we were convincing institutional investors that Bitcoin is for real, it's an asset they should be allocated to. And now literally we live in a world where we have, Bitcoin, crypto, ETPs. We have an executive branch that is really welcoming towards this asset class. We have the potential for regulatory clarity. We have a Bitcoin strategic reserve, and we're kind of still seeing the market trade sideways a little bit. So from my perspective, that means two things. One is that I think that, given the fact that there are about 40 million tokens this time around, it's really important for investors to really dig in and do their work. Something that we do on the research and product team at Grayscale is think about just bridging crypto back to TradFi and thinking about the tools and frameworks that traditional investors use to tie the value of something back to the intrinsic value to its market value. So for us, that might be looking at, for smart contract platforms, total value locked to market cap. So we're doing a lot of that work, and I think that investors increasingly, as this asset class matures, need to dig deeper and do that work to find the compelling opportunities. And I think that we're in this space where you have two opposing forces. One, which we touched on, is a really favorable backdrop from a policy and potentially a regulatory environment, and the administration's willingness to engage with the asset class. We've never seen anything like this before. At the same time, we're seeing a lot of macro uncertainty brought on by other policy decisions around immigration, tariffs, and that's causing risk assets to trade down more broadly, which is bleeding into crypto. Because at the end of the day, despite potentially one day being an uncorrelated asset class, being potentially a call option on digital gold, it's still a really new and nascent asset class, and we still see a trade in line with risk. So we think that this really could present an opportunity for investors who have done their homework to have an attractive entry point into this asset class. And if the economy continues to hold up, we think that prices from a crypto perspective could bounce back relatively quickly. So there could be opportunities there.
And Chris, Ray makes a good point here, because there have been positive developments from a regulatory and legislative perspective, but there still is a lot to be done, because to Ray's point, when tariffs and other policies, an example, it's the execution at the end of the day.
You're exactly right. There are a lot of very positive things that have happened in the near term. The SEC is untying that Gordian knot they created by regulation through enforcement. They're trying to clear the decks. There are a lot of very, very positive things. But now the work begins. They've sort of picked off the low-hanging fruit in terms of saying, meme coins are entertainment and stable coins are not securities, et cetera, et cetera. Now we actually have to craft policy and legislation, and that's going to take time.
Yeah, I mean, it's not as if there's a framework that necessarily exists where you can plug and play, and that's the hard part of it, is the legislation. But I think is interesting, Jason, you're still seeing institutional adoptions and banks encouraged in coming into this space, even though it has experienced some volatility.
Yeah, absolutely, and I think in terms of providing that clarity, right, this stablecoin legislation is potentially hugely impactful. So for stablecoins, we're already seeing product market fit, right? 18 of the 25 largest payment service providers are already looking at stablecoin projects, a number of financial institutions. Our platform recorded over 3 trillion in blockchain transactions in the last year. 55% of those had a stablecoin leg. So when I look at stablecoin legislation, first of all, the stablecoin use case itself is tremendous, but I also think there's a bigger picture here as well, right? So what we're doing is we're asking banks to make a major investment in infrastructure if they want to come into the stablecoin space. So they're going to need the ability to mint and burn. They're going to need the ability to hold and they're going to need the ability to send securely and receive securely,
Yeah.
right? And that's also going to be true on the recipient side. So we're talking about merchants potentially replatforming into the digital asset space. We're talking about retail customers with wallets. It's a huge undertaking. What I think is interesting and less spoken about, since it is stablecoin legislation, right, is the way that once you have this investment in infrastructure, on what day after does some very smart person in one of those banking institutions say to themselves, how do we increase the ROI on this massive investment we've just made, and where do we go next, right? And it might not be the obvious use case. It might not be tokenizing securities. I heard the argument made that the interbank repo markets are ripe for replatforming. But we know that these banks are profit-driven entities. We saw after, for example, Graham Leach Bliley, not only the reunification of the banks and broker-dealers under the holding company, we also saw banks operating travel agencies. We saw them warehousing physical commodities. Given the space to grow and the room to run, they're going to do it. So I think stablecoins are going to be massively impactful, both across the financial institution sector, but also as a gateway to new use cases.
Yeah, and Dave, you know where I'm going to go with this, right? We're hoping that they're thinking of a privacy-first, cyber-first by design when it comes to building around these digital assets.
It's a balancing act, right? You need to build trust in the ecosystem, so you need data security and privacy. I handle a lot of data breaches. I've seen things go wrong in the crypto space, we'll say, and that creates a lack of trust potentially. So if you're going to make this a mainstream product, investment product, you're going to have to tackle security. And I think the question is, how do you do that, right? Is it a top-down regulatory approach? Is it a bottom-up kind of industry approach? Is there something in between? We've seen security, frankly, in the kind of general environment lag behind kind of profit and investments in terms of making money as opposed to actually spending the money to secure. But that can really come back to bite. If that investment isn't made over time, it can cause a lot of lack of trust and ultimately undermine some of the benefits and great things that have happened recently.
Yeah, especially when data is the commodity, right? It's nation states, it's tech companies, it's all kinds of industries that are competing for data. And to some extent, that framework does exist if you think of it through the lens of privacy laws and governance and so forth. I mean, those frameworks do exist, but to your point, it's challenging because you might not know who's on the other side or where these threat actions are coming from.
You have to be incentivized to do it, right? That's
Right.
what it comes down to. And I think the incentives aren't quite there, but do we want a really heavy regulatory regime at the same time that's going to cause more friction? I don't think that's the answer either. I think it's an industry-led effort, but it has to be done and it has to be uniform and certain to some degree.
Yeah, I mean, right, too, you also don't want to go back into this, regulation by enforcement scenario as well, especially with such a young asset class. And I think sometimes we have to exercise some patience as it develops and it matures.
Yeah, I think we're very encouraged by what we're seeing, and we're really excited to be potentially entering into a world where we have more regulatory clarity.
Yeah. And Chris, with the crypto czar coming in and with all of these initiatives that they have, again, just because there's these initiatives coming in and we have a new SEC chair and not rhetoric, but that strategy conversation is out there, you just don't flip a switch and it's perfect the next day.
Correct. And I mean, so if let's step away from crypto for a second. Let's talk about the internet, okay? And there were in the early days, it was who's going to regulate and what's going to be regulated and blah, 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 blah. It took us 10 years to get to net neutrality. Now, I'm not saying it's going to take 10 years in this case because there are a lot of things that are different. But the point is that we're now entering a phase, I think, where we're starting to have the real conversations with industry players, crypto native and crypto adjacent companies, and that's actually going to cause a lot of debate.
Yeah.
Because right now everybody in the space agrees that we need regulation, we need rule of law, we need all these things for this industry to grow. Okay, we agree on that. But put these fine people around a table, and I bet we could disagree about a whole bunch of things for the next 20 minutes.
Okay, you certainly can. I mean, you guys know this as lawyers. We can argue for the same exact point, but two different sides of the coin. And I think that's part of what the challenge is. And by the way, it's not just digital assets, right? It's every industry that's leveraging these emerging technologies. It's moving quicker than regulation can be exercised. At the end of the day, the way that legislation is formed in the US, it isn't quite the same as plug and play framework, in the EU or other areas of the world.
Yeah, absolutely. But I think you've identified the opportunity that we have here in the United States. I think the rest of the world, frankly, has been waiting for United States leadership. I think that leadership is at least, it's here, I think. And I think we need to start with some of the basics, right? And I think from our perspective, we're an infrastructure provider. I think we need to get that infrastructure layer right. I don't think this is a controversial point. As you said, Jill, these are information assets. We're talking about the security of information, and that is intrinsically wound up in concepts of cybersecurity and all these things. So making sure that we understand how to secure data, how data can move securely and safely, and putting in place a framework, a broad-based framework that makes America the safest place to store your digital assets. That's a huge competitive advantage, Jill, right? So we have the greatest capital markets in the world. They're not the greatest capital markets in the world because they're cheap or easy to get into. They're hard, and that means we have the best companies in the world coming here to raise capital. We can do the same thing with cybersecurity. Yeah,
Dave, that's an excellent point that was just made here, because it's not just about what kind of money can I make in Bitcoin. It's not just about the trading and the hedging of the asset. The underlying infrastructure and the regulation around that is the next phase of the global capital markets, especially if we go into tokenization. That's where your liquidity is going to be sourced, right? So this is more than just what product can come out or how these things are trading.
The question is, what are the carrots, what are the sticks, and how do they apply to different entities in the ecosystem? One of the concerns with imposing top-down is you squelch innovation, right? So smaller players can't do the compliance, they don't have the resources. Bigger players start getting an advantage. So I think there is a little bit of a balancing act there as well, not to be too prescriptive because innovation then could suffer. But at the same time, I think in this space especially, above and beyond just information generally, you need to have the trust around the data security and privacy. Because again, we saw recently some big data breaches, some big losses that affected the market directly. And I think a bullet was dodged fairly recently there. But there are other bullets potentially coming along the lines. So we'll have to be very careful about striking that balance. And again, I think it's going to be an industry approach, maybe with some regulatory teeth to it, but really a lot of input from the industry, hopefully, with respect to those regulations to achieve that balance.
Yeah, and Ray, I would make the argument too that any industry, any asset class, there's always going to be bad actors that's going to try and take advantage of it. I mean, we'll have this conversation every 10, 15 years, Did because of Madoff, did we stop trading stocks? No, right? This is an opportunity where you learn, and those outliers are shaken out.
Yeah, and I think we've seen that over the, since 2009, there have been, this industry has shown, Bitcoin has shown to be extremely resilient. And I think that as we work our way through these things that happen, you're absolutely right. You're going to have bad actors. And there's an opportunity for industry participants and key players to step up and do the right thing, and for regulators to continue to build frameworks that don't stifle innovation and at the same time keep everything in check.
Yeah, I think, Chris, part of the challenge is the balance of what the industry is advocating for. Once you start seeing meme coins or how some of this gets gamed, it always makes me nervous that it's taking a step back.
Well, listen, again, let's step away from this space for a second. If you look back in the history of the United States at every major innovation that came along, the invention of the steam engine, the invention of electricity, the invention of the telephone, what did we have on the front end of all of those things? We had fraud, we had manipulation, we had bad actors, right? This is no different. Yes, it's crypto and it's different in the sense that it's a new innovation, but the human behavior hasn't changed.
Yeah.
And so we should expect this. And we should figure out, and hopefully regulators are starting to figure out, how do we root this out? How do we prevent it? And how do we make sure that we're not creating or building new contagion rails?
Yeah, I mean, that's a good point. And again, whether you relate it specifically to digital assets and the infrastructure of that or other industries, the good actors and the bad actors are leveraging the same type of technology, right? So it's like 4D chess that you're playing all the time.
Yeah, absolutely. Listen, it's true that the underlying technology is agnostic, right? And we even see that with nation states. The way China is using this technology is very different than the way I think we would use it. But I think the key point here, right, is that we do see these hacking events, these theft events. We see them too frequently. The severity is too high. They inure to the benefit of North Korea and other nation state enemies of the United States. So I think there is real value in attempting to lower the severity and frequency of these events.
Yeah, and that's where the innovation comes in. Because you
Absolutely.
learn from these events and you don't want to be afraid to execute on new product and new ideas because there might be some vulnerabilities. I think the smarter that we get in cyber technology and thinking of privacy first and cyber first, it's not becoming a cost, it's becoming part of the business and it's factored into the ROI. I think there's been a really big shift with that over the past decade.
It can't be an afterthought. It's
Right.
again, we're talking about information assets, so it's fundamental. And information attack vectors are what you need to be worried about. What's striking about Bybit, but also some of the other attacks that we've seen, is by all accounts, the Bybit attack was something that they worked on for over a year. I mean, that should be chilling for any company, right? The thought that right now someone is potentially targeting your business for the next attack. So it has to be a constant investment and reinvestment and reevaluation. Are we doing enough? Are the systems safe and secure? Are we auditing and testing them in a way to make sure that we're taking appropriate steps?
And that's where part of the framework comes in as well, so you understand what your response sequence looks like. And that, all the actors, FBI, other regulatory agencies are all in the loop.
So there's the before, stopping it, and then there's
Right.
the when it happens, how do you deal with it, right? And you can actually get a lot of bang for your buck in having a good response to an event like this. Again, despite what happened recently, markets were down for a bit. They came back. There was a way of handling it that involved competitors supporting each other within the ecosystem. I'm not sure that's a viable model you can count on every time, but the more you can think about how you're going to respond ahead of time, even game plan it and play it out in tabletop exercises, the better you're going to be and more ready you're going to be when it actually does happen. And we're seeing a lot of companies being more proactive in that space, very much so. On the other side, I think if we get more agreement on standards around security, we're going to get more innovation in the security market too, right? So when we talk about companies having to implement and embed in security in their systems, a lot of it's going to be provided by third parties who are innovating, right? So there could be a scaling effect that eventually happens if that opportunity is viewed as something that is valuable in the market, which I think it already is in many ways.
Let's switch gears for a moment here, Chris. What about the Bitcoin reserve?
Well, it's funny you should mention that. So whether you agree with having a reserve or not, the first challenge is that you cannot create a reserve by executive order. Congress has to step in.
In theory, yes.
Okay? In theory, yes, in theory. So let's assume we take the normal path, and Congress does have to step in. Now we're going to start to hear debate and argument on the floor about, does this diminish or strengthen the U.S. currency as the world's reserve currency? And you could make arguments either way, right? So there's going to be a lot of angst about that. In terms of the current Bitcoin that the U.S. government owns as a start for the reserve, keep in mind that the Bitfinex Bitcoin is slated to be given back to the people that it was stolen from. Mm-hmm. So it's not as large as people think. Is it 96,000? Is that the number, the Bitfinex Bitcoins? Does anybody know? I think that's
I don't know the exact number.
It's a large percentage of the current U.S. government holdings.
Yeah.
So it's going to be a very, very interesting debate. Larry Fink yesterday was on record as saying that it would destroy the U.S. dollar as the reserve currency. I'm not sure I agree with that statement.
Right.
But again, it's going to be a very, very heated debate.
And it's a statement that I've heard echoed in terms, look what's happening with gold, right? And how people are thinking about that. But to wrap up here, Ray, because we're nearly out of time, because Bitcoin is finite in what's available and it is volatile. How could that impact the reserve, or how could it impact from other institutional or government ways of leveraging it?
Yeah, so I think at the end of the day, what's unique about Bitcoin is that it's kind of super sovereign, and that's what makes it special. There is no manipulating the supply of Bitcoin by governments or other entities. So I think ultimately a lot of folks are going to have opinions about what the implications could be, but you're creating a means of exchange of peer-to-peer transfer of value for 2.5–3 billion people in the world who don't have access to basic financial services. So it's one conversation for us to have sitting at this table, but the opportunity and the egalitarian underpinnings and philosophical roots are really much bigger than that.
All right, appreciate everyone's insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.